Cannabis banking panel moderator for today is Tyler Beuerlein. Tyler Beuerlein, Chief Revenue Officer for Hypers. Hypers is a US-based financial tech company providing banking and payment solutions for cash-intensive industries such as cannabis, CBD, and money services. And man, we could really use your services in Colombia. As Chief Revenue Officer, Tyler builds brands, manages key relationships, and strategic partnerships. For over 5 years, Tyler has pioneered Hyper's expansion efforts, networking with financial institutions, government officials, regulatory bodies, and major commercial cannabis entities. He possesses an intricate knowledge of the banking and regulatory climate, key industry influencers, industry dynamics, and market history. He has also become a key contact for media outlets, analytics companies, industry consultants, and investment firms searching for reliable, accurate sources of industry information. Tyler's contacts and relationships in the US state legal cannabis industry are unparalleled. As a result of his influential value, he was selected to be chairman of the National Cannabis Industry Association Banking and Financial Services Committee. He's also a member of the Forbes Business Development Council, frequently publishing articles about the banking and payment environment in the cannabis sector. And yes, I've read some of your articles. Great content. And Tyler founded and managed a large beverage company prior to joining the Hyper team and was a professional athlete in New York Mets Association. Imagine all of that in a professional athlete too. God, Tyler, if I was a female, I would want to have your baby. So without further ado, Mr. Tyler Beuerlein, please take it away.
Thanks so much, John. I really appreciate the intro, and thank you for having me. I've been very fortunate to be on the front lines of this space for a long time now, and as we all jokingly refer to it as dog years in the cannabis space. So I think I'm creeping up near 50 at this point in cannabis years. But we've lived this world. We've been on the front lines of it in a unique way, and we've gotten to know most in the industry. And I've had the good fortune to meet both Michael Newman and Ron New, who are the panelists here. I think they've done some really innovative things for the industry, and very excited to interview them and let them share how they're doing what they're doing and kind of where they're going and how that's going to benefit the industry. So Michael and Ron, if you'd like to introduce yourselves real quick, I think that'd be great background.
And Michael, you're muted.
There we go.
There you go.
It's Michael Newman. I'm the founder of Worth Street, and very brief history because we don't have a lot of time, but I had an idea of a way where smaller banks that were serving the cannabis industry could expand their ability to accept deposits without creating additional risk to them or risk to the financial system. So I partnered up with a bank, actually through one of Tyler's introductions. And with that bank, we went to regulators and proposed our business plan to accept this range of deposits. Regulators accepted that, and we went into business. It only took us a year to craft the legal agreements to be able to do that. And then we've taken that basis and moved into using the exact same structures with the regulators' approval, ways to allow a small bank to be able to do $100 million volume size of transactions, again, where it doesn't create additional risk to the bank. And it makes the bank more profitable, and it serves the financial interests of the of the government regulators. So that's my quick background.
Okay, I'll jump in here. So I'm Ron New. Joined the company a little over a year ago. Career background in capital markets, embarrassing to say, over 25 years. Coming over to Worth Street, I would describe Worth Street, we are creative problem solvers. And listening to the prior speakers and looking at the chat, there's a lot of conversation about the role of passion in this industry. And that's what makes it fun to be involved in. We're passionate problem solvers, and our background is finance. So we saw cannabis as an opportunity to put those problem solving skills to work and address those friction points, first with a scalable banking solution. And then we've pivoted over, and we've been, the bigger challenge has been addressing how to get lending into the cannabis industry, because the same problems that impact banking are very similar to the same problems that impact lending. So when I think about who Worth Street is, I look at a comparison to Silicon Valley Bank. If you're in the tech space, you've probably heard of them. They were founded in the 80s. Their role first was to gather the deposits of all the tech firms that were getting funding from the VC and the private equity space, and then they started creating additional solutions to service that space. That's what we've been doing at Worth Street.
It's great. So guys, I know that this has been mentioned previously on this webinar, and I guess we'll just hop right into it. What have been the biggest hindrances to banking in the cannabis industry?
Ron, let me take this and turn it over to you right after. I date back into this industry as a user in college in the 1970s. My favorite product was Jamaican Blue Mountain Ganja, and I was following after what Robert Mitchum had done, which is enjoying doobies throughout Hollywood. You could have a press agent get you out of trouble back then until Richard Nixon came along. Richard Nixon made cannabis a Class 1 substance, and it wasn't because he was particularly against cannabis, but he wanted to use it as a way to bring felony charges against Vietnam War protesters. So it's with that cannabis prohibition perspective that we've all operated, and this has begun to change with the expansion of statewide cannabis legality, and I guess we're now in 36 states. But that still leaves this stigma or a taint with regard to banking, because the problem is that the heart behind banking has to be its board of directors and how it serves its clients, and they have to make sure that they're not exposed to BSA and AML, this Bank Secrecy Act, and any money laundering screening issues relative to all the deposits that are coming into their banks, and they have to be concerned also about having too high levels of deposits in that industry. If something goes sideways, the banks are severely penalized, but so are the actual board of directors members of the banks. So they're very loath to take on too much risk. So that's been the heart of the problem in banking, and that's why it's been basically focused largely on credit unions and state chartered banks.
Yeah, I'll interject. You know, Michael touched on it, but the panel before us, the ladies who were speaking, even though largely what they're dealing with is CBD, they've faced the stigma, pushback from the Amazons of the world, pushback from the PayPals of the world, and as Michael just pointed out, what a lot of people don't realize and what makes banks so cautious is, one, civil liability at the directors and officers level. But it was a bank president that told me, he says, whatever level of stigma exists in the populace, and obviously after the last election, it's clearly not a broad issue. Whether you're a red state or a blue state, legality is pushing through, and we have the majority of states that do have some form of legality. However, whatever level of stigma resists or continues, This bank president says, multiply it by at least a factor of 2 when you get to the board level of banks. So stigma is certainly probably the biggest obstacle, aside from the level of regulatory and compliance, which, Tyler, you probably know better than anybody, because that's the role of Hyper.
Well, and to just kind of piggyback off that, one thing that people don't realize is regulators have never been given guidance either. So they were learning with the banks and credit unions trying to bank this industry. And as you can imagine, if you're a regulatory body and you're trying to examine a bank banking the industry without any guidance of how to do so, you know, they've had to learn as well. And that's been a very challenging thing. One other thing I'll just add as well, the risk to the officers cannot be covered by the insurance policies of those financial institutions. So if I'm a chief compliance officer and I do something wrong and a civil money penalty is imposed on me personally, there's no, that's something I have to deal with outside of the insurance policy. So guys, that being said, what are the challenges of banking and lending in the cannabis industry?
I guess I'll dive in, Ron, and you follow. There's a whole host of regulators. There's state, federal, OCC, Federal Reserve, and they all protect the integrity of the financial system. The FDIC insurance is absolutely critical for people to put deposits in their banks, and the FDIC has its own set of regulators. And the banks are the watchdogs for the regulators. They're the gatekeepers. And if the banks fail in their role at being gatekeepers, as Tyler was just suggesting, severe disciplinary action. And the last thing in the world that any of these bankers wants with a failure as a gatekeeper doing this BSA and AML compliance, they don't want the guys with the black jackets with white letters all over them coming in to pay them a visit. It's the last thing in the world they want. So this places the bank in a place where it has to be able to make money in the cannabis industry, servicing them. And it's not the same as banking a typical client, where it's more of a commodity-based service. It requires a very specialized set of skills to provide that kind of oversight.
All right, then I'll piggyback on that. So when you're looking at banking the cannabis industry, obviously, first thing is the concern is protecting the integrity of the U.S. financial system. And because there's such a high level of cash that goes through the cannabis industry, and Tyler, you might be able to interject here. I know Hyper's done some research that shows that even once we get to the point where you don't have to do an end around to use a credit card, there's still going to be a high percentage of people that are going to prefer to pay with cash. So anytime where you've got a high cash environment, there is the huge risk of money laundering, which when Michael refers to BSA and AML, that's the Bank Secrecy Act, which I believe is of 71, which is specific to money laundering, and then AML is anti-money laundering. That's the role of the bank in terms of protecting the financial system. So the desire is to make sure all funds moving back and forth are subject to screening. When it comes to lending, then you have a whole other host of issues, because taking deposits is probably, as long as you've got that BSA AML component, that's a manageable thing as long as your volume's not too high. If your volume starts to get higher, well, then there's the greater risk of mistakes. And then it goes back to what Tyler is saying, the errors and omissions policy at a bank for their directors and officers does not cover the civil penalties they could be subject to. That's why banks are so reticent to do this. And this is why, even if we get to a point of legality, the compliance and regulatory burden is going to still be there. When it comes to lending to the industry, well, then there's a whole other set of issues there, because now the bank's not just taking the deposits. Banks, theoretically, the ones that have a dedicated program arguably could be making loans, and probably more of them should. But because we're dealing with state chartered financial institutions, because we're dealing with a piecemeal deconstruction of prohibition, it's state by state, and that's why you're only dealing with state chartered financial institutions, they tend to be smaller in size, which means the loans that they can potentially make are not that large. You're probably looking at ideally a sweet spot of around $2 million to $5 million per loan. When a grow costs $10 million or more, that doesn't really work. And then there's the whole issue of the fact that while this is a very rapidly growing and fragmented industry, it is an industry where a lot of the players out there aren't really making that much money. And we could, you could do a whole other panel on the issues, 280E and what have you. So then you get into the underwriting characteristics, and I'll turn it over to either Tyler if you have another question, or Michael if you wanted to address how we've approached the issue of lending.
Yeah, just a couple of things, Ron, and then I think we'll pivot to another question. The industry needs to realize that there are a myriad of industries that dwarf cannabis from a volume perspective that have been shut out of the banking system because they're cash intensive by nature. And so this is not, as much as it is a federal illegality problem, it's also just as much a cash intensive business problem, and that will not change upon federal legality. Two other things real quick. The SAFE Act will not bring the branded card networks into this space, contrary to what's stated in the media in many cases. So it doesn't change the federal legal status of the product. The branded card networks will not enter until this is federally legal, period, end of story. So those are all things that, again, I think it's important for the industry to understand. So next question, who's really banking the industry? I mean, we see the FinCEN reports. I see stories all the time that there's 700 plus institutions banking this. And of those institutions, can they provide a full suite of products to the cannabis industry that's going to help them succeed?
I'll start off, Ron, and then dive in. Less than 10% of those banks that are filing suspicious activity reports, which they have to file periodically to the U.S. Treasury, are actually full service cannabis banks. A lot of the suspicious activity reports that are filed in the banking systems are letting the Treasury know that the bank has become aware that there are cannabis businesses that are trying to run deposits to their bank, and the bank is not really focused on being a full service cannabis banking provider. You really need, in order to be one of those banks, you need to make use of the suite of services that somebody like Hyper provides. To successfully do it, you need fintech and regtech software platforms to provide the granularity that, believe it or not, the regulators are now seeking. You used to be able to do this with manual systems, but as this whole business has gone multi-state, it's not possible to be able to do this anymore the old mom and pop way in the community banks manually. So you need to validate every customer, you need to track cash transactions, you have to provide accountability for every dollar in or out of the MRB bank's deposit account. And that gets right into the next realm that Tyler was talking about, and that is how do you do debit card type payments that banks want to be able to do, because they want to take cash out of the system. They very much want to move towards a system where you can use some form of a smart app and a cell phone to be able to validate the customer and then move the money directly from that customer's account into the MRB bank's merchant account through a processing system. And that's what one of the solutions that Hyper does provide. So that's the basic oversight in terms of the volume of banking in the cannabis industry. It's, even though it seems like everybody's banked for the most part today, it's not something that's necessarily easy to do.
Yeah, and I'll just jump in there. So when you're looking at who's banking it, again, you're dealing with state chartered institutions, which your banks, think of a community bank or a credit union. They tend to be smaller in size. Typically, on a quarterly basis, you'll see roughly 700 institutions that are filing those suspicious activity reports. As Michael said, the belief of those in the know is that there's probably fewer than 10%. So out of the entire country, you probably have fewer than 100 banks that are actively banking this, that actually have a program. Then when it comes to lending, well, then that becomes a whole other issue, because then you get into the whole thing of what do banks like to do? They don't like to make risky loans. To bank an industry, to lend to an industry, you have to understand the industry, you have to understand the culture, you have to understand the users, and frankly, the majority of banks don't really grasp that. They're still in a learning process, and they're still trying to get comfortable just with the idea of taking deposits. So what we've done in terms of trying to address that issue, we created what's called an institutionally funded direct lending vehicle. And frankly, that's what we're in the process of securing funding for. So we look at things on a cash flow basis. We look at the companies that have good management. We look at the companies that are profitable, that have free cash flow. We underwrite based off of that. And then we turn around and we try to size that loan out. And most importantly is we have a partner bank. We have what we've called a reciprocal service agreement. Michael and the lawyer spent the better part of a year working on that. It sounds easy, but it was a highly complex document that had to be put together. But we've done that and inserted a bank into our direct lending facility so that the issues that are of concern to the regulators is protecting the integrity of the U.S. financial system. So we have a bank that's acting as our servicer and administrator that is watching and doing those BSA, AML duties back and forth. And they've also incorporated the Hyper platform to give them the ability to do it at scale.
That's great, Ron. And I guess you kind of touched on it, but
Gentlemen, 5 minutes.
yeah, how do you lend to the industry? Okay, if you're not a bank, and is there a better way today? I mean, can you talk about kind of the differences? And I know many of these guys have gone out; they've had to take loans out with private money lenders to buy property. You know, it 20% interest only rates because they had to own the property to operate in it. And what many people don't realize is if I'm a cannabis operator and I go to lease a retail location in a limited license market, but the owner of that retail location has a bank note on that property, there is language in that bank note that prohibits him from leasing to a federally illegal operator. So as the liquidity markets dried up, many of these MSOs have frantically been looking for cheaper money. So if you could just talk about, again, specifically the product and how you guys are doing what you're doing, I think it'd be very valuable.
I'll start out, Ron, and then maybe you can dive into the capital market side of this. There have been various sources of funding the cannabis industry, which we've all observed over the last couple of years. Cash, stock, for acquisitions, for roll-ups, and so forth. And there have been problems along the way that just those solutions don't scale. So what Ron and I came up with was making use of this MRB bank partner through the reciprocal services agreement. They become the loan servicer and the administrator. They give the institutional investor comfort that the institutional investor is not going to be exposed to the BSA and AML risks for lack of compliance. What that allows us to do is go to a bank, let's say it's only $100 or $150 million in total assets. We can go out and put a $50 million loan out to a cannabis company, and the funding would come from an institutional investor. The institutional investor is taking on the credit risk, but the institutional investor is getting much higher yield than he would get, and yet the metrics on that loan are of investment grade quality. So let me turn this quickly over to Ron because we're running out of time, and talk a little bit more about that, because I think we've done something that's unique that lets institutional investors come in without the exposures to the cannabis industry that they're concerned about.
Okay, so I'll jump in here, and part of the audience, this may get a little higher level in terms of the finance side. Feel free to ping us separately if you'd like to explore the conversation more. But in short, if I'm an institutional investor, typically you want to be as close to the money as possible. So what we've done, and it's basically called being at the top of the waterfall, is the money's coming in. Michael has a background in entertainment finance. That was a role in how we created the structure. I have a background in securitization. That was a role in creating the structure. We approached this trying to come up with a means of a product that is functional for the borrower, the cannabis company, and a product that addresses the risks and concerns for the potential institutional lender investor. So top of the waterfall, we've created an amortizing product. So what our base structure is a loan that is a 10-year amortization with a 4-year balloon. Coupons, don't have enough time to get into the analysis, but Part of being a trader is you look at the broader capital market system and do a comparative analysis as to what the other options and competing products are out there. Cannabis, as everybody knows, historically you've been stuck to either using cash, using stock as a proxy for cash if you're a public company, or you've been left to the hard asset lenders, as Tyler mentioned. You're doing well if you can get financing at 15%, but we've seen balance sheets routinely where we're seeing the loans that are at 20% and well above there. It's the loan to own. We've created a structure that aligns interests. We underwrite based off of cash flow, and we've addressed the issues, and most importantly, we've incorporated a bank to address those risk issues from a regulatory standpoint, which is making sure that the money is validated going both ways.